So let's get a sense of the road we've traveled since Monday on our fixed income markets. Let's talk to Bankole Odusanya, who is a fixed income dealer at UBA. He's actually the head of the unit. Bankole, it's good to have you on the program. Good morning. Welcome to the show.
Good morning, Boston.
Yeah, I'm sure you can give us a sense of the week so far. There was a savings bond auction, and then we had the budget and a bigger uh, speech about the state of the economy and the outlook from Mr. President. What else has made the big headlines, big splash this week that we're looking at the yield curve this Friday as we wrap up the week?
Yeah, it's been an active week, Boston. Just as we discussed a few weeks ago, the central bank has continued to prorate the amount of central treasury bills it issued via its OMO treasury bills auction windows. The reason is because they're keeping an eye on system liquidity, which is about around 200 billion or 200 billion on the average. The issue with this is that the rates are still very, very attractive, so the demand is high. However, less than 40% of the demand is being sold. This has happened for 5 consecutive Thursdays. So the spillover of the demand has come to the secondary market and brought some level of activity there. We've seen a lot of activity on Treasury bill secondary market where yields have dropped to 11% for bills below 180 days, and then for bills between 180 days and 360 days are trading at 12% and 12.5 already. Yields have dropped. The effective discounts have dropped on the secondary market by 100 basis points.
Bankole,
However,
is
they
there,
almost stopped at.
Bankole, a quick one. Is there a fatigue here at the primary market? And if yes, why?
Okay, it's not a fatigue situation. The central bank is comfortable at issuing at 13.3 levels. However, it would not exceed certain amounts that will then create system illiquidity, where overnight interest rates will then go to double digits like 50% and 100% like we have seen in the past. As we speak, overnight interest rates are at single digits, and it's deliberately kept at that. The central bank keeps a good eye on the I&E market, which is the most liquid FX market in the country. Rates are there is 362. So with all those lines being stable, I want to believe they do not want to issue so much treasury bills via the OMO market, the window, such that it creates imbalance and then an overnight scarcity of funds. So that's what they're doing basically. But this simply means that for those who do not win at the OMO auction, they bring their demand to the secondary market, which is good for us dealers because yields are now becoming more profitable. T-bills are now becoming profitable because yields have dropped. We've still seen a lot of inactivity on the bonds end. However, there's a calendar for the last quarter of issuance being issued by the Debt Management Office. Just in line with the budget, which you mentioned, they plan to raise more than what they offered in the last quarter. I would like to sound it out here that a proposed calendar is always different from what the DMO always sells at the end of the day because they are also mindful of the cost of debt. In as much as there's a lot of furor and noise about the cost of debt service in itself. So they have kept the stop rates at below 15%. This simply means that most times when they plan to issue 50 billion, for instance, on a particular maturity, they cut the volumes they offer just to manage the cost of debt.
Very, very interesting. So just wrap it up in about a minute or less. What your outlook is for the rest of today?
Okay, we expect continued activity on the treasury bills, and most of the participants of the market who did not win at yesterday's home auction are willing to buy these treasury bills at below 13, like I specified earlier. But going on into the last quarter, smart money is on staying on treasury bills end and then waiting to see a possible shift in stop rates on the bonds end. Since we have seen that the budget is huge into 10 trillion space, and then the deficit needed to be funded also is very high. We would expect that the debt management office gives into pressure and then would probably move towards 15% stop rates at the bond end. So basically right now, you want to sell some of your bonds position held at 14.5 and hope to get 15% at uh, the upcoming auctions as we go into the last quarter of the year.
Looks you guys have some interesting times ahead. Thank you so much, Bankole Odusanya from UBA, the head of fixed income. Thank you so much. Have a great day and a great weekend. Let's check in on the flip side of the market straight, and that takes you to equities. It's been a very quiet week. Again, we've lost some of our key indices this week, but Temple is looking at the opening calls for today on the Nigerian stock market. Is live to us from the NSE trading floor. Temple, I'm sure you're looking at the ticker tape behind you there, the big board. So what are you seeing? Can you read some of this out for us?
Well, it's looking like we'll close positive today because we're seeing some bargain around Guarantee Trust Bank and the likes of Linkage Assurance. These are two key companies that are pushing up the indices now. In early trades, we've seen a rise of 0.38% in what the all-share index is saying at this point in time. That's basically the sense we have of the market right now. We've seen some about 2 million units of shares of Linkage Assurance traded now at this point. And if you recall yesterday, that was a company that was on offer. So perhaps some valuations have been done, and they've seen that the prices of this particular company is at a new low. So it calls for re-entry of some new investors on it. Again, this is the insurance companies in recent time have become very, very liquid, given the recapitalization exercise that is ongoing on that part of the market. So we've been seeing entries and exits on a lot of the stocks that you have in that sector. I'll give you an example. NEM Insurance has been trading at 2 Naira 30 kobo for some time. If we look at the ticker tape now and look at the trading portal, it's something that some investors are bidding or trying to bargain on to see how they can bring the price lower so they can enter. But it hasn't changed. It's still at 2 Naira 30 kobo. One of the insurance companies that's of interest to us right now, again, is Lasaco Insurance, which, of course, released its the resolutions of its AGM. Today they are paying 5 kobo in dividends to a lot of investors. But so investors that are actually invested in it gives them room now to exit, knowing that yes, they've crossed the qualification stage, and of course the payment is to be done today. So it is down at this point by more than 6%. So investors are taking out their funds to now see where else they can actually push the funds to. The insurance sector, I should add, is one sector to watch because, again, of all the sectors in the market, it's one of the best two so far in terms of performance year to date, Bossem.
Yes, Temple, what else are stockbrokers or stock traders talking about on the trading floor? Are they talking about the budget? Are they talking about the bad roads in Lagos and how they're getting fixed and all of that? Are they talking about policies? What exactly is on the minds of the stock traders right now, or the state of the market? This is about 15.5% in negative territory since 2019 started.
Yes, I mean, these are talks that have been dominating their discussions actually today so far. Budget, I mean, how effective will that be for them, as traders in the market? How will it reflect with impact on the market, on equities specifically? How will it push up the indices of the exchange? Because given the trading session of yesterday, as it closed down some 0.06%, that was the 8th consecutive session of losses that we've recorded so far. So the point now is how do we push things upward? I know that they've been engaging some of the executives of the exchange, talking to them regarding what the next plan is for them in terms of the initiatives and programs the exchange is probably putting together to be able to help them, push up these equities. The state of equities is not looking too good at this point in time. Again, a lot of investors have been concentrating on the fixed income side of the market. What will attract attention of investors, or attract investors to the equities market? That's the conversation that they're having. I know they're also happy to hear of the MOU between the Nigerian Stock Exchange and Luxembourg Stock Exchange. But again, the concern on their part is that there hasn't been liquidity, not so much of traders. The bonds is not a major part of this market, as it were. So how much of contribution or support will this MOU bring to this market?
Yes,
a lot of investors, a lot of these traders are really interested in derivatives, but they want to see the practical side of it. So they are eager to see the market, coming up with a whole lot of improvements so that they can actually have more liquidity boson.
Yes, a lot to talk about and wrap everyone's head around in the days, weeks, and months ahead. Thank you so much, Temple, for wrapping up the show for us live from the trading floor of the Nigerian Stock Exchange. Thank you, everyone, for watching. I'll see you again next week. Do have a great weekend, and goodbye from Lagos.